Alright, good morning, good day. This is the African Crypto Warlord. I hope you guys are doing well. My previous analysis I posted on Rumble, so I'll post this one on Rumble and YouTube. What we're looking at here is the 1 minute on Binance, XRP, USDT. This is a Laplace distribution cone, and the general idea being is each of the colors you see over here are range-bound targets, okay? This is a statistically significant candle, and we are projecting the variance forward off of a point in time where there was zero volatility, meaning that technically the market was random and the person with the biggest amount of money or shorts coins would win. That is the time for them to do so. Alright? And usually when that happens, there's huge grid trading, as you've seen now offered on Binance, but that's been observed for about 4 or 5 years when we have big flash. So the general idea is all of these levels, these lines, is when we have the flash and you go look at like a bookmap, order flow, or whatever you want to use, tensor charts, you'll see when you have a flash, your book gets netted. And where those targets are pretty much these blue lines. And because the bots now goes run logarithmic and algorithmic things, their entries will forever be following positive and negative drift. Okay, so now that we've got the skew and all that bullshit out of the way, the general idea of this is it comes from the mean, right? It wants to touch one of the pink lines. So it came from here. This is before a big breakout that we had this morning. It comes from here, as we can see, smoked this pink line, automatically charges to that pink line, comes back down, holds the range, your intraday range that would form, and then starts closing above it. Alright, comes back in. Now, if it closes above the pink line, it gets super bullish. And as you can see, that was the last test. And then it got super bullish. And now, once it gets super bullish, you start looking for any one of these. Alright, so what can I say here? This is on the 1 minute, so just know this is about 53 cents over here. So we have this blue line coming in, which is, I'd say, like a 3 sigma move from the mean, or more, from this one, in logarithmic terms. So I think it's actually a 5. That would be about an 8, and this is a 2 sigma move. So this is a 5 sigma move about, and the general idea being is that is now the line of that move, the volatility percentage change, and you start closing above here, you look for this blue line. Now, how do we define these points and know which blue line and when it's more than likely going to get hit? We put on our other tools, okay? And what we can see here is we have a range that's underneath our VRE. So if we come into here and we keep on failing this frequency over here, so this will be +4. So if we keep on failing this Laplace band, we can expect touch here. Furthermore, we can expect a pullback to 54.15 cents. Alright, now we can get super intricate, and we know that it has the idea to go touch the red line if it closes outside the orange line, and then you'll look for continuation from this thing. If it's too red, then you'll know that it's more than likely going to touch this target here. So there's finally some frequencies coming into play, touching for the first time on this pump, so we know that this will be a point of interest. So let's take it all the way back, okay, and whilst we're here on the 1 minute, if we start failing below the blue line, okay, you're looking for any one of the ultimate power means. Short's a little bit chilly, sorry if you can hear me shivering here in my voice. Furthermore, you fail this blue line, you're looking to hold the trend for like a hidden bullish div on the long-term time frames, 51.80 cents by the time it gets there. Okay, and this is its daily magnet. As we can see, the VRE mean is over here, and our current top was pretty much put in as the means were starting to cross. Okay, so that's the highest point in the data, and it wants to return back to the mean for safest keeping. Now we're going to look for things on the higher term time frames that are going to keep that up. We've already stated, just on the 1 minute, if it breaks below the blue line, we're looking for some continuation to the downside. If it holds above the blue line, we're more than looking for continuation into this cross up here. Alright, so we have the 2 red. We look for a little touch down here, safely wick in. It's not that big of a move, it's 0.0003 cents. but that would be the safest thing for me to know that it won't be scalped out over here. Okay, that's your 1 minute. I hope that was helpful. Those were your intraday time frames from here to the daily mean. Seeing it's quite volatile. Now let's go monitor what's holding XRP. So we already know that we have a target to the downside, so there's 53 cents pretty much. Hold above there on the 21-day. You have a clean mean reversion through to the upside. You'd have to wait for the red flashes to end, and that will tell you that your RSI is more than likely starting to give you a down pointing signal. Anyway, so mean reversion to the upside on 21-day, it's going to have to hold above this mean for the next 42 days in order to target 73 or 74 cents. Okay, it does have the opportunity. There is an outlier event occurring on the return oscillator, and it is within bounds for this to break through and the candle to touch. And if the candle closes above here and it's broken through, that will be the reversal down. Okay, now that's looking alright. Volatility, everyone's saying pretty much up, given that we have had a big candle. So we can see that we're breaking through some means here. Here's another mean at 51.64. Hold above there. When volatility starts to contract, hold above there for the positive drift, I suppose, to kick you back up into the 70 cent region. 7-day, also now I have a 7-day cone on, and this will be quite important. I should actually have them on the same screen, but if we start breaking outside of this Laplace distribution cone, things get quite hectic. But that really only happens once we've destroyed these two levels. So we can see here at 56.34 cents is the top side of this random distribution. Okay, now what's here? 57.66. So as the volatility comes through the book, there is a chance for it to break through, but what's going to make it pull back into this blue line, like we're trading on the 1 minute, is this reverse wave trend. So it would need to start holding above 51.60, as already been stated in our previous means, for it to continue, put in a little hidden bull div if it does get rejected up here at 57.66. And put in a little hidden bull div and then break through for continuation to the upside. Now we have some more noise up here, but we can cross that bridge when we get there. Okay, so we can see that we are obviously in a trend. And where's this downside? So the downside target to keep this trend is 50 cents 81. We have hit an outlier event, which does occur. So now when the next 5-day prints, we're going to expect more than likely a touch or pullback into, where's this guy? Yeah, so as this little green line crosses at the top here, we're going to expect a pullback. So we already have an upside target of 56.92. We have demarcated that in this region here, 57, and where was my other one? Oh, okay, it might be on the 7-day cone. I think it is here. And there we go, 56.49. All right, so this region is going to become a little bit trappy. Now to the 3-day is having its first contraction phase whilst positively correlated. It's going to take a lot of work now in order to have this still be an outlier event. 3-day has, even though it's just started as well, it's picked up, but it hasn't picked up enough. It's saying returns are starting to decay to the upside, which just means that technically the upside candles are going to get smaller. It doesn't mean that the top is in. That's when we get the mean reversion phase, as you can see down here. Mean reversion phase through the green, boom. That's when the power comes in. It just means that the down candles, even though it's green over here, are getting smaller and smaller, and then boom, there's a mean reversion. Okay. So we're going to have to look for the 3-day unwinding because it is having an outlier event. Let's go see if we have another reverse wave trend up in this region. Nothing as of yet. There are some means down here. Ultimate power mean is very tight. So any closes below 51.63, again, as we've stated, which is now our current 3-day JMA. Any closes below there, you look for continuation to the downside. And that would only follow through. Okay, later, let's see. We're having huge contraction phase. Well, it's significantly positively correlated onto our 24-hour cone. Okay, so now that we've demarcated these higher regions, let me just bring this back. Now that we've demarcated these higher regions, this is on the 24-hour. What can we see? Simplest observation. Sure, there's a bear div, hidden bear div, but that thing will only get the opportunity to play through if we start closing below where we've previously called this target, 53.67 cents. So the other one was 53.63 cents or something. So you start closing below here, it will deny this mean reversion phase, which would technically mean that the hidden bull div will play through. So what are we looking for this pump to continue? We're looking for a close above 53 pretty much, where these dots are. I need to turn that off. Where's that? So 53.72. Looking for a close above there to get you to the continuation phase of 58.31. Now, as we can see here with this Laplace distribution going on the 24-hour, we came in, we tested the whole range, boom boom, lot of noise down here, a lot of noise. So this was back in March, the beginning of this month, end of last month, February. So it's just been getting beaten up, but respecting the pink ranges, okay? Respecting the pink ranges. As you can see here, from blue line to pink line, as we stated on the 1 minute, it gets super bullish. And boom, now we've broken above. So we know that for the 24-hour to stay true, we have to hold above this part in order to execute trades at 58.33. Okay, as you can see, that could be the next print, a little wiki structure, head and shoulders, something nonsense like that. Now, I'm not saying get short, but I'm saying that I'm starting to look for things that start cutting pumps, even though this is super erect. You always got to be wary. There's a lot of work that needs to be done in order to push that 3-day outlier events to keep them as an outlier event. Let me redo that. 1, 2, 3, 4. So there's a hidden bull div in there that pushes it up through. Keep on closing above that mean over that side. That's cool. Now you have the 12-hour that is just a little bit sideways. I don't think we're going to use the 12-hour for serious observation. We'll just wait to see at what price it stops flashing red, and we'll mark it off, and then that will become the point to fight for. Okay, so there's still some positive drift in the book, which is keeping these shorts from coming through on the 6-hour. Now we're starting to hit something. We're closing below the VRE level, and there's still an opportunity on the 3-hour for hidden bull div. Now, I have some homies that may ask, like, returns first or volatility first? And to be honest, it's quite hard to decipher, so it's a fair question. But what I generally look for is that's got a hidden bear div that's coming through, and if I was to zoom in, I'm having my first super scalper mean reversion phase on the 3-hour. Okay, now I know that immediately at some time, because there's positive drift in the book, this thing's going to give up the dump, and it's going to pick it back up. And in the motion of it picking it back up, it's going to look to see if volatility flips, contracting was positively correlated. And if it does, it allows for the second half of the mean reversion play to continue through. So I'll repeat that. There's going to be the flush down, and this is the pick up. And as the pick up starts to get higher and higher, does this thing go down, down? Like if it gets more negatively correlated, then we know that this mean reversion phase isn't going to happen soon. All right? But if it starts pumping up and this thing starts to retract and turn around into a positive phase, and these things are still contracting, then we know that the second half of the return oscillator has the follow through. Okay? Now that's the play of getting the better entry on the low term time frames. Okay, wait for that flash to end. That's on the 90 minutes. We have a 90-minute mean reversion phase, and now that's also a catch-22. And here's what I was talking about. Because remember, now we've just halved that time frame. So this line is matched to that line. So currently it is saying dump, but it's losing its correlation. So it has opportunity to pump. This side is saying contracting, negatively correlated, which is technically a sign for, this is the very first sign for continuation. Okay, there you go. As it starts pumping, you're going to wait for this thing to go into the red, and then we'll give it a stretch up. That's when we go back to the 3-hour, and we see if that stretch up that happens on the 90-minute pushes it down or flips this up. Anyway, and as we know that, then we know that the 3-hour 90-minute are just processing signals. 45-minute here, contraction phase, also processing sound here. One is saying pump, one is saying dump. We have mean reversion phase, super scalper. So what am I going to put here? I'll use my super scalper also to say, that's the little red line, we'll get continuation if you close below the VRE. Then I know that has an opportunity to have a bearish zone to defend for the bears to continuation to the downside. Otherwise, if it closes above, it adds the opportunity, like this little white line is pretty much that red line over there. It's relativity. And as it closes above, there'll be a hidden bull div, and you'll see it form there on top of the return oscillator. Now, what have we got? We got some mean reversion to the downside. We're going to look for some continuation here. On the 15-minute, contraction, both negatively correlated. It is losing its chance to the downside. Entropy is increasing. So this is normal entropy, that's Shannon Entropy, and entropy is increasing. We're going to have to be a little, here's what we are looking for. The pullback, and now the second half of the reversion phase. Okay, 5-minute is looking a little bit too pumpy over here. We need to start putting targets out, and contraction phase, looking for a little bit more continuation. Let's see if it can get it. We have the 1-minute targets. Okay, so already demarcated, this being a point of liquidity, and it's still trapped in this region. Now, we'll leave it off with this. We've had our cross, and we're going to say if we start closing outside 54.76, you can imagine that with these little time frames here are getting bullish to try and attempt. Alright, if the 5-minute holds like this posture, it's wanting to push to the upside. Otherwise, shit's going red. This is going to be a lot of signal processing that happens. I'll leave it off with the 1-minute targets, which is this now, which is coming to play. It's in the next minute. Just call it 59.99, and we get there if we hold above this blue line. Alright, so each one of these will be a problematic situation if it does get up to here. Otherwise, you start failing below this ultimate power mean, which will be soon. If it closes down like this, and each time the red and green spaghetti closes below the higher term time frame 1, it's just going to get failed and failed and failed. Otherwise, what I would see is a squeeze. If we start failing now, I would see a squeeze down in this direction. Otherwise, looking for continuation here. I hope this is a helpful analysis. Our breakout range is 0.5% to the upside or 0.6% to the downside. If it gets there today, it's 9/11, guys. It's 9/11 my time. Alright, let's go see who's doing what on these indicators here. Come on. Bear div struck, close below reverse wave trend, contraction phase, a lot of noise. It's going to be a very, very hard time to trade this thing. Yeah. That's the first top side. And you fail here, you look for mean reversion, you start failing below the blue line, you look for mean reversion at the beginning of the video. To hold this range with the amount of volatility that's been kicked in, seeing as this could be a lower high, you will have the opportunity to set a higher low down here if you can hold above the orange band. Okay, close outside this orange band for continuation, close outside this orange band for continuation. Doesn't look like it's going to get its continuation right now as we're having our mean reversion phase. Here's a good example. Contraction was positively correlated first half of mean reversion phase. If the second half of mean reversion phase kicks in, we look for 5.449. That's the first kick that I was trying to explain on the 3-hour. And then you have sideways. Now you have positive drift. As it dumps, it's dumping itself into a pump. That's positive drift. And if it holds this positive drift, you would expect to see a bull div, or denying the bear's mean reversion. This is the part that I find very, very cool to trade. I sometimes don't get the max profits because this is where I just take my profit, and I can miss out on like 4%. But if I know that I can get a range of, what is it? here to here is 0.6, and if it fails with a dollar bag, and I don't have to buy less coins higher, at 416, at 60. So there's like 1% in a day is the general idea of what I try to do. And I think to do that, you can do it in 4 trades, you can do it in 1 trade, you can do it in 1,000 trades. It's just obeying your setup and walking away. Set your target and walk away. So yeah, I gotta be a big boy now and set my targets and walk away and be happy with my 1% in a day. I know it sounds like a stupid number, but if the markets are moving 10% variance, well, there you go. Alright, very wicky range, gonna be super hard to trade. We've come in here. If it holds above here, it will deny the outlier event that's happening here. If it closes below here, it will confirm this outlier event, then we look for continuation to this side. Alright, let's take it back to the 5, 7, where's that thing? Okay, 7 day Laplace distribution. If it does have the range, we've already demarcated, and we're looking for any closes above 51, 50 cents, 60 cents, 51, and this is a higher one, which is in our cone at 5269. Let's see if it's an intraday cone. 5269, 5269. It's somewhere around here. Alright, at this orange patch. Hold above there, hold above the orange, the yellow patch. You can look for another intraday continuation to the upside. That could be worthy of breaking this higher high, this previous higher high at the current time frame. Alright, I hope this was helpful. Close above there, another test here, close below here. We start looking for this blue line at 54.20 cents. Close below 54.20 cents, round about, look for continuation down, close above, look for continuation to 55.99 cents. Yeah, wait, was that right? 55.99 cents. Hope that was helpful. African Crypto Warlord out. What's that? Contraction, that's into a pump. Very, very dirty to trade. Very dirty to trade. And yeah, that's the signal that I would have to trade. And you just get in and you get out. Very hard to read if you only have one Shannon Entropy oscillator or one PC to one Shannon Entropy. You wouldn't know what's cutting. Now it is sideways again. This one just needs to turn red for pump. It hasn't turned red for a pump, so it's going to get scalped. Maybe it'll turn red if it gets a little bit more legs. Nothing. Okay. African Crypto Warlord out.